All right. Good morning, trade pros. Welcome to our morning market update for Monday, April 16th of 2018. This is George Papazov from Trade Pro Academy. In today's morning market update, we're going to talk about a few things. We're going to talk about Russia's stock market and why it declined. Also, we're going to look at the first FANG stock to report earnings and Facebook and Mark Zuckerberg's compensation. Something very interesting you need to know. And last but not least, Bank of America's earnings report this morning. So we got a full update planned for you. There's going to be a lot of stuff to talk about in today's update, all right? Let's get started. In Asia, Japan's up 0.3%, and Hong Kong is down 1.6%. So markets in Asia are down quite a significant amount. China down 1.5%, and India's up 0.3%. So other than Japan, which just barely held some gains, China got obliterated, down a ton, all right? They got hit hard, over 1.5%. In Hong Kong and the mainland as well. In Europe, at midday, London was down 0.4%. Also, Paris was flat. Frankfurt was up 0.2%. So you start to see a little bit of stability in the European session, and the drop in the Asian markets at least held some support. And we're seeing some upside this morning here in the S&P 500 and U.S. futures as well. Dow Jones is up 0.6%. S&P is up 0.6% also. And NASDAQ up 0.7, 0.7 of a percentage point, while crude oil is down 1.3% to 66.55. 66.50 is our first support level on this down move from crude. We think this week it's an opportunity to sell rallies. I think this week, the first 3 days, Monday, Tuesday, Wednesday, will be a pullback on crude. So we'll be heading down to some support levels, looking for an area at which we could maybe build a long trade. But right now, you got to sell rallies and enjoy that downside. That's, I think, the best play on crude oil at the moment. Gold futures are flat, and Bitcoin's down 3%, down to 8,096. On Bitcoin, this makes a pretty interesting level to take a long position at, because the last couple of days on the upside, we had some volume increase. And we know that when increase of volume is happening with price action increase, that's supportive of continuation to the upside. So now that we've had the upside and a little dip, this could be a really good low-risk entry on Bitcoin for the upside, all right? So I'm liking it. I've been waiting for months for this sell-off to kind of exhaust itself and drop and bottom out. And I think it's finally happened, all right? This morning, we had Empire Manufacturing Survey. We had the retail sales number as well. At 10 a.m., we're going to have the Housing Market Index and business inventories. At 1:15, Fed's Bostich will be speaking. And at 4 p.m., we're going to have the TIC, Treasury International Capital, update to the market. All right, so Russian markets were down a significant amount overnight. It opened down 1.3% lower. Aluminum giant Rusal down 8%, huge drop. And the ruble is tanking as well. The reason Russia's suffering some downside is because the United States attacked Syria. They did a missile attack. There's some news reports that 71 of 100 missiles were actually intercepted successfully. The United States is denying that. The point that's really the point that's clear here is that there's a little bit of instability getting priced into the market. Russia's getting hit extra hard because there might be some extra tariffs they're going to impose on them, extra sanctions the United States might impose on Russia on their gas and oil. So they're taking a little bit of a nosedive here to start the week prior to the United States Open. All right, let's move on to FANG. So FANG stocks: Facebook, Apple, Amazon, Netflix, Google. Of the major five technology stocks, the massive big darling stocks of NASDAQ and the tech sector, Netflix is rather reporting first. It's up 1.3% pre-market, and they're set to report earnings today after the market close, or after 4 p.m. So if you have any positions or option plays on Netflix, it's highly advisable that you close them out. Earnings events, while they have a lot of volatility, they're highly speculative, as you don't really know the direction of the move. Taking a position in speculation of where the earnings are going to go before the earnings is flat out gambling. Like, it could work for a long time, then you could lose a lot of money in one shot as you build false confidence on a type of strategy that shouldn't be used. There's no professional trader that I know that gets long before earnings. I know some of them sell volatility, but that's a risky play. I wouldn't touch that with a 10-foot pole. I wouldn't trade that with your money. All right. Netflix shares are up 37% since the report of last quarter, and 62% year to date. They had a really good in January, a record number of new subscribers, and the market just absolutely panic bought this thing, and it soared 37%. and it's up, like I said, 62% year to date. It outperformed any other company on the S&P 500. Netflix did, except one. It's a small biotech called Nectar Therapeutics, but they're a smaller cap company, so they might have been up 95,000, 1 million%. They're still probably trading at $20 per share or somewhere in that vicinity. Whereas Netflix is a massive stock. It gains multiple billions of dollars on a rally day, a single rally day. So it's interesting to note that. All right, Netflix, the strongest stock in the S&P 500. Watch it. I think if we miss earnings today, it's going to tank because there's a lot of upside already built into the stock. Facebook and Google are weak. All right, they're much weaker than any other FANG stock. And I think if Netflix misses, they're going to tank and catch down with Facebook and Google. So watch for that. Very interesting report at 4 p.m. at the closing bell. Speaking of Facebook, Mark Zuckerberg's compensation jumps 54%, more than half, to $8.9 million. His salary is $1, but the rest is stock compensation. All right, and it's been that way since 2013. Here's an interesting part. Mark Zuckerberg in the last couple months has been selling a record number of shares on his insider transaction. So insiders have to report what they sell, and Mark Zuckerberg's been selling a lot of shares, a ton of them. He's been offloading at a pretty breakneck pace. He's been getting out of the stock. It's interesting to see. And his total voting power at the moment is 59.9%. This is one of the biggest public companies, and he owns 59.9% of it, valued at $66 billion, his stake, or 401 million shares. That's a ton. All right, Zuckerberg's doing good for himself. Last but not least on this morning's market update, at 6:44 this morning, Bank of America released their latest earnings. And for the first quarter Q1 earnings essentially is up 0.62 earnings per share versus 0.59. So they beat their EPS number on revenue of 23.1 versus 22.9 billion. So they beat on earnings per share top line, and they also beat the revenue number. So it's a really good report from Bank of America. You dig a little bit deeper and you find out where the gains came from. So FIC revenue, fixed income, commodities, and currency was down 13% year over year, which is a pretty big chunk to be down, 13 percentage points. Where equities trading was up 38% year over year. And this is being attributed to the increase in volatility. So as I always say, higher volatility means higher opportunity. Whether or not you take advantage of that, that's up to how you've been trained and how you're comfortable, how you're confident, and what strategy, what system you're using, what risk management, etc. But when you have higher volatility, you should be having higher returns. There's traders that will tell me, especially newer ones, that say, oh, this market moves too fast for me. It's way too volatile. Well, understand that these are the kind of markets that true traders actually thrive in. No trader has ever complained about too much volatility. They have complained about a lack of volatility. So if markets are volatile, there's actually a ton of opportunity. And as you can see, Bank of America is capitalizing on that. We have as well at TRADEPRO Academy. We've had some really good months that have just passed us based on this volatility and this price action. I'll tell you this, as a trader, if you're uncomfortable trading through volatility, it means you're probably not confident in your strategy and capability to capture movements. Because if you think about it, the faster a market moves, the faster you can get paid. All right. Yeah, somebody might think now, well, that means the faster you're going to lose as well, but you're going to lose a fixed amount and you're going to get paid a fixed amount. So as long as your ratio is on, it doesn't matter. You're going to have more trades. You don't have to risk more particularly. You just have to be able to take profit quicker and to have things move twice, 3 times as fast. You know, when you have time to do analysis, you'd be like, oh, well, you know, it looks nice here. When there's volatility, it doesn't move like that, man. It goes chop, chop, boom, boom, goes through. So you got to be ready to pounce and step on this thing when it gets volatile. And I think the market's coming into some more volatility. Watch out. In the next couple of days, I think volatility will pick up, especially midweek this week from Wednesday onward. Today in the trading room, I'm going to turn around in one moment. We're going to start trading. But today I'm looking for some upside in equity markets. If we break out through the resistance level that I kind of painted for subscribers on Sunday's webinar last night, we break to that resistance on the S&P 500, buy stops are coming out. So we're going to try to look for the upside early on. And if we're wrong, then we're going to start shorting. That's the beauty of this business. I don't have to be right. I just have to make money. And that's all that I care about. And when you start to kind of convince yourself of that, it becomes a relief. You don't have to be right. Phew, you don't even have to know where the market's going. You just got to watch and take action. That's it. That's all trading's about. Our trading psychology mastery course begins May 1st of 2018. Sign up right now. It's part of the elite package. we're only going to tape it once live. We're going to do a taping of it live May 1st to June 12th. Every Tuesday, we're going to do a lesson, 1 lesson, 2, 3, 4, etc. It's going to be 7 lessons in total. So 5 plus 2, 7 lessons. You're going to learn a lot. You're going to learn psychology on a much deeper way than any trading book has taught you about trading psychology, because they focus just on trading psychology. But unfortunately, trading psychology is one tiny fraction of the way the overall human mind works. And if you can figure out how to control your mind and how to implant these goals that you want to achieve, the rest of it figures itself out. You don't have to worry about how you're going to do this, how you're going to do that. Your subconscious mind will realign everything for you and make it happen. It's a very powerful tool. That starts May 1st, 2018, obviously, at 8 p.m. You got to be an elite subscriber for that, and I'm only doing it live once. All right, we're going to record it live once, and then it goes archive mode. So you got a special opportunity if you're listening to me today. All right, guys, take care. Have yourselves a great day. Trade careful. Look for some upside early on, and then we'll see what happens. About 1 hour after the open on the United States session, after 9:30. So around 10:30, you get a real sense of upside or downside. But during the first hour, I'll be looking for some long trades. You guys take care. Have a great day. Manage your risk. Trade like a trade pro, and I'll see you tomorrow at 9 a.m. Goodbye and all the best. Over and out. All right, trade pros, let's get in here and set up the trading room. I'm kind of losing my voice this morning. Maybe I need to do one of those things where you type and it speaks it out for you, like the Stephen Hawking machine. All right, YouTube, take care.